Retail sales giving bonds a lift, and the pound falls in line with its negative outlook. Alright guys, it was an overall messy and quite frankly boring session yesterday. The US 500 and the Nasdaq ended the session marginally lower as some of that Friday and Monday rally just ran out of a bit of steam. It wasn't all bad news though, because the Dow did manage to close the session green, with the index staying above that key 50,000 mark. Now, having said that, the moves yesterday were tiny and you almost have to squint to really see any decent movement for US equities in the bigger scheme of things. Now, we saw a bit more action over in treasuries, where we saw a pop higher with yields falling lower after December US retail sales data disappointed expectations across all four key measures. We had things like retail control, which is a narrower core bucket used to track the part of retail sales that feeds directly into GDP, that actually saw a contraction along with downward revisions. Now, the bottom line is it wasn't pretty, but at the same time it wasn't a disastrous print, but it was enough to see markets marginally increase their rate cut expectations for the Fed, with now close to 60 basis points of easing implied by year end. Now, over in FX, it's a tale of two currencies right now. The yen continues its rise, which is a pain trade for hedge funds because they piled into yen shorts heading into the Japanese election. Now, the trade worked great for them last week, but this week there is pain there because most expected the yen to weaken, and so far the currency has done nothing but rally following the election victory. Now, it's tough to argue for upside for the yen fundamentally speaking, but at the same time, there's no point in fighting price action when the message is clear. On the opposite side, the pound was the weakest currency on the session, trading in line with its fundamental outlook. With a dovish Bank of England and now political issues in the mix, the picture remains bleak for sterling. Now, over to commodities, we saw a bit of a pullback in both gold and silver, but the moves were relatively small when we compare that to what we got used to over the last few weeks. When looking at the gold and silver charts right now, they do seem stuck in a precarious place, with the bulls too cautious to get back in, at the same time shorts similarly weary of that prior bullish momentum. I suppose right now is the ideal environment for those range traders to look for opportunities. Over in crypto, Bitcoin gave up the 70k mark, still showing a lot of fragility under the hood. And for the session ahead, the US NFP report is of course the center of attention. Forecast right now is for roughly 70k on the jobs number and unemployment rate sitting at 4.4%. But after some interesting comments from the White House this week, markets are expecting something slightly softer. And of course, after last week's bad job openings and ADP data, there is a lot of attention on this one right now. So brace for some volatility later in the US session.